Okie dokie. Awesome. Hey, Thomas. Yeah, we're going to take a look at Kodak. And all right, you got it. And also, we're going to do like a freestyle kind of session right now. So if you guys want a Q&A session, I actually had the first segment of the day, and I had the 9 o'clock to 10 o'clock. And we were talking about having some trades that we were watching for setups. And I would like to do a quick recap on that. How many of you guys in here have been into the morning session from 9 to 10? How many of you in here? Anyone in here? Just type a 1 in the chat box if you have been here and tuned into my pre-market game plan and the trade ideas for the day. Okay, nobody? Wow. Okay, nobody was here at 9 o'clock. Okay. All right. Okay. That's fine. That's fine. All right. So I'm going to do a little recap of what happened throughout the trading session today, what we can expect tomorrow from the market. And then I'm going to take some quick questions from you guys. And if you want anything related to stocks or futures or whatever questions you may have, obviously trading related. All right, so let's take a look and see what we have going on and what has happened in the market since the open. Number one, let's start with the indices. When we began the trading session this morning, we had a big wash into NASDAQ, and NASDAQ was a forced sell. David is going to have the recordings from these sessions available on his website and also on his YouTube channel. And you could go back and you could see how our method can be back tested. So we were on from 9 to 10 o'clock, and I posted my trading ideas and my buys for the day. We started the day relatively neutral, and we had some levels. We haven't altered any of these levels so far. Here, we haven't done anything. So we were trading off of these levels that were prepared pre-market for you. And this is something that we teach our traders in our classes of how to design and trace these levels, which are levels of confluence. And these are institutional levels based on which traders, algorithms, and I'm talking about institutional traders, not the traders that trade from home like we do. All right, so let's start with first things first. And we were looking at the relative strength and relative weakness into the market. And we noticed that there was like a nice blend, but we've noticed a little bit of weakness into the structure of NASDAQ. And NASDAQ actually was the one index that created that steeper pullback right into the open, because the rest of the indices created that pivoting low before the market opened. But NASDAQ, no, it just wanted to pull back a little bit more. It was a forced sell, an institutional forced sell, and accumulation from that point on. So let's talk about these levels. First of all right, how many of you guys in here day trade futures or swing trade futures? Anyone in here day trade futures or swing trade futures? Just type a 1 in the chat box. I would love to hear from you. All right. Okay. Hey, Thomas. Okay. Awesome. Okay. In the middle of the night, where are you at? You also swing trade options. Okay. Yeah. So guys, we have a lot in common here. So we have a lot to talk about. Now, before the open, so this was actually before the open right here. You can see where we have the gray highlighted area represents the pre-market trading activity, this whole pre-market data. I'm just highlighting here, where we actually started the New York trading session. Okay, so where the white starts, white area, the white field represents the New York trading session. We had these levels pre-market. Okay, so you can notice here that we have some notations on charts, and it says bullish above, moderate bullish above. So when we have moderate bullish above, it means that the tendency for price is to moderately progress higher. However, when we reach the bullish above area, it signals a massive bullish buy. So what happened is that right off the open, we had a blast into YM. So We also had a blast right here. You can see, oops, sorry. We had a blast right here at the purple line at the moderate bullish above, right? And we also have a bullish above area, which was a little bit higher for NASDAQ because NASDAQ was a little bit more on the choppy side today. And we also had a bullish above area, and all these were pre-market on the charts. Guess when? At 9 o'clock in the morning. So this was the breakout level right here in Russell. Now, what happens is that I analyze and I evaluate the pre-market data, and we do have a formula to trace these levels to have confidence in our trades, not to be caught on the wrong side of the trade. Because a lot of traders, you know, come into the market and say, wow, the market is open, I just have to take a trade. And that is the wrong approach. You need to wait for the market to digest. Now, when the difference between the bullish above area and the support spots, and here it is, we have a first support area here, we have a confluence area support, and this is the bounce. Notice that this is the bounce area right here. Okay, and this again was traced pre-market into the 850 area. Now, typically when you get a bullish above zone, which is situated on this purple line right here, if you decide to take this trade, these have a relatively wider stop, but these trades have the odds of succeeding into targets. And in fact, you can see here that it ran into the target zone. We had a secondary target zone, which was right here into the dotted line. So they have a chance of following through to target of more than 80%. Now, what is the downside of this particular, let's say, setup? Is that the stop is too wide. So you can see this whole chunk right here. This is the stop. So definitely this is the read off a 1 hour chart. What I like to do is I like to wait until the market settles a little bit from the fleecing effect in the morning, because you have the institutional, you have the institutions and that are trying to scale in trades, or they're adding new positions, or they're scaling out of trades, or they want to sell positions. So I want to have the calibration happen. And the calibration for me happens at on the 5-minute chart. That's where it happens in general. So typically what you were seeing on the 5-minute chart, so you are going to see either a straight move up into the first 15 minutes of the day. So if you're getting, let me just get a tracing tool right here. So if you're getting a move that is happening to the upside, let's say from 9 o'clock to 9:45, at 9:45, you're going to expect a pullback, okay? And then this pullback should remain somewhat shallow, sometimes with variations. So it could have a pullback, retrace, and an explosion higher, or sometimes it's 9:30 to 9:45, pullback into 10:15 or 10:30, and from 10:30, you're getting the break for the upside. And of course, there's the third scenario where you're getting from 9:30 until 9:45 a range, and this is the most important range of the day, because any breakout over 9:45 is going to send the price higher into 10 o'clock. Now be very careful, because when any of these three scenarios happen, the price typically follows through into 10 o'clock or 10:05 or 10:10, and then it reverses. It's a normal reversal time into the market that happens, and institutions are taking profit from the first institutional move that is happening from 9:30. And remember that there are a lot of algorithms that are acting based on these scenarios, and we teach everything in our classes on how to deal with the 9:30 into 9:45, and then the pullback into the 10:30 segment, and then therefore after. Now, as you can see from this drawing, in any case, whether it's a range or it's a move to the upside with a shallow pullback and then a mini range, or it's a blast higher into 9:45 and then again a shallow pullback, these are all levels that prove that the asset, whatever you're trading, whether you're trading stocks, and by the way, this methodology works impeccable with stocks as well, along with ETFs, right? So if you want to trade the Qs, the SPYs, or any kind of ETF like XLF, you name it, SMH, any ETF works really great. TZA, TNA, you got it. Okay. So what do you notice here, like from my drawing, is that this move is relatively small compared to this other move that is happening right from 9:30. So what do you think happens here? In the morning, these algos do not hold on to the positions the whole entire day. So they're in, they're out, they're in, they're out. So normally the life of the trade into the first hour of the day is very short, and especially from 9:30 to 9:40, from 9:30 till 9:45. We do have a strategy, and I would love to share this strategy with you right now. And this is based on the first 5-minute high-low. You can see it right here. This is the first 5-minute high-low right here. So typically when you're getting the first 5-minute bar in, and if it's trading above the moderate bullish above spot, you could take literally any break above this candle high, put your stop below the 5-minute low, and go with the flow into the targets. Obviously, you only have to be concerned about your trailing, which I think, and we talked about this in the trading room today, I think trailing is one of the most difficult tasks as a trader, because there's always that unknown into the market. And every single time when the market opens, you have no idea whether you're going to get a chop day or whether you're going to get a follow through day, and you have to plan accordingly. We're not going to get into that topic because I could talk about that for hours. But leaving this, let's say this is a simple strategy, the 5-minute high low, and you can see how that worked, never revisited the high, and then it engaged and it moved above the bullish above spot, and it engaged higher right into the target. Typically, this is the target for, for follow through for higher. And also notice that the price stayed above the 10 EMA, which was a really great thing to do, because the 10 EMA is a little bit more aggressive moving average. But as long as the price is remaining above the 10 EMA, it means that the power trend is intact. So this is exactly what this 10 EMA is showing. Also, when you have the fanning out of the moving averages like we have here, we have the 10 EMA, the 20 SMA, and you're having the 50 SMA. So basically you have kind of like a railroad track. That also shows you that the power trend is intact, and any pullback that comes into the 10 EMA can be seen as a new buying opportunity. Or if you want to trail, you can use the 10 EMA for the trail. So it's a very simple strategy. Once it closes in, and you can see that the moving averages are scrunching together right here, okay? And this is very typical. This is, look at the time. I should clear this out a little bit because it, okay? So you can see it right here. This is still the doldrum period right here, okay? And price action from 12 o'clock, actually from 11:30 to about 2 o'clock. The price action is relatively sideways. I don't like to trade around this time. And again, if you break above this box, the price is going to continue higher. When you break below this range, the price is going to continue lower. So it's very easy. Don't try to overcomplicate trading, because that is the worst thing that you could do for your trading. Trading is actually very simple. You have to stick with simple, very simple, common sense rules for trading. Don't try to overcomplicate anything. Okay, so we were talking about the fact that when you have a trade that is developing, hold on just 1 second, because I want to do something here and I don't have my cursor. Just bear with me 1 second. All right, here we go. So what I want to do is actually maximize the sell so you guys can see it better, okay? All right, Thomas Leo, when you have a 5-minute breakout, are you just looking for one-to-one? No, I never look for one-to-one. And that is a dangerous thing to look for. You have to look for at least 2 to 1 or 3 to 1. The problem with trades, with 1R trades, is that if you, for instance, have a habit of taking only that 1R for your trade, that's not a good thing, because if you have a winning ratio that is phenomenal, that is above 80% or 90%, you can make money on that, but you have to be like super precise. And a lot of traders are not, and especially if experienced traders can go for that one to 1R, but very experienced traders. What you need to shoot for is 2 to 1 or 3 to 1. The reason behind it is, think about this. You have one trade, let's say you risk $500, okay, on a first trade, and you're hoping to make $500, but you don't because you stop out. Hey, stop outs are part of the process. You can't stop out of trades, and I stop out of trades. The most important thing in trading is to have big wins, small wins, break even trades, and small losses. And we're going to circle back to that. So a one-to-one hour trade means that if you're losing on your first trade, then you lost your $500. The problem is that when you have your second trade that is lining up and you're still risking, because you have to risk the same amount in each and every single trade by position sizing and not by allocating a fixed amount of let's say of contracts based on your account size, that is completely 100% wrong. So when you decide to take the second trade, and let's say the second trade stops you out, then you have an accumulated loss of $1,000. So you see what I'm getting at here. So that one-to-one R, so far you had a first trade you lost, you had a second trade you lost, but guess what? The third trade that you're going to be taking, obviously risking the same $500, right, by position sizing. Let's say that trade, let's say reaches your target, and ultimately, let's say you're going to make $500 or $600 because you're going into that 1R and you're taking it off at 1R. That trade that you just took here with that 1R trade did nothing for you, then cover for the loss that you incurred in your first trade. It didn't cover for the loss that occurred into your second trade. The whole purpose of this 2-to-1 or 3-to-1 R, and that's why you have to think a gazillion times before you take the trade and measure your parameters and know all your trading parameters, and not just shoot in and get in and say, oh, okay, I'm gonna wing this, or oh, there's the red momentum, I'm getting in short and I'm getting 2 or 3 ticks or 3 points or whatever, because with this volatility you can get quite a few points. But it's not a strategy that is going to work in the long run, because you're not going to recover anything. 1-to-1 R is an amateur type of scenario. You're never going to make money in the market if you're going for 1-to-1, ever. And mark my words, never, ever, ever. The only way you can make money in the market is allocate the same amount on each and every single trade. So keep it structured, keep it very organized. And then when you actually have another trade that is lining up, look for that 2 to 3 R's. Because if you get your trade into, let's say, second base or third base or fourth base, that is equivalent to your second R or your third R, that last trade, that third trade that you put on, not only that it took you out of the whole of the first trade, erase the losses from your second trade, but it puts you in profitability in your third trade. So therefore, now you're up 1 R. Okay, absolutely, that's the right approach. You got to let it run, just trail the stops. That's the right mentality. That's the right concepts. Exactly, Daniel. I wish you would have posted that so everybody could see it. But I'm gonna read to you guys what Daniel said. I generally let it run, just trail stop. I take whatever the market is willing to give me, right on the money. You should not set goals and say, hey, today I want to make 2 R's and I've got to hit the market until I get the 2 R's. You're going to penny yourself to death. Okay. So the right approach is take from the market whatever the market is providing you that day. Another thing that is very important to tap on is make sure that you're aggressive when the market offers you the possibility to make money into the market, not when the market is choppy. Because if you keep on pushing when the market is choppy and when you don't have any recognizable setup, you should not be trading. Okay, so let's get back to the chart right here. And by the way, I just picked on YM, and that's because we had actually 3 trades in YM today. In the trading room, and let's continue with YM here. And if you guys have a different, have a preference of another chart that you want me to show, that's fine. But you can see here that we have the moderate bullish above spot right here. So we know that any break above this area is going to send the price higher. And obviously we're going to get again bullish above this spot, and this is going to be target zone, right? Why is it target zone? Because you have another resistance spot right here. So you see 2 dotted lines right here. This is massive resistance. And there's no surprise that the price, when it achieved this target zone, it created this whole entire range right here, right? Because we were in the target spot. All right. So oftentimes what the market does, it tends to run up. I never feel the urge to jump in right immediately. So I need to see a pattern. Again, if you have a pattern, you have a trade. If you don't have a pattern, you should not be taking the trade, because when you have a pattern, you have to have a distinct entry, a distinct stop, and you have to have a measured move of where the possibility of that follow through can take the price, right? So you can see here that we have the first level of support, right? Right here into the red line, we have the first level of support. And now that, you know, basically I don't really act in the first 5 to 10 minutes, and especially in this volatile market, have not really participated in the first 5 to 15 minutes that often, because I want to wait for price confirmation. And that's just my style. So right after we had a first initial push to the upside, we noticed that we have created this range right here, right? So we had another level of support that was developing. Sorry about that. I'm going to clear it up and I'm going to clean it back again with some really nice straight lines, okay? So we had another level of support. We had a level of resistance that was lining up. We had a first peekaboo high right here. So actually, this is actually the first entry that comes in, guess when? At 10 o'clock reversal time. Because if you recall, when I first came on the mic, I was telling you guys about, if you get a first initial move into 9:45, you can expect a shallow pullback, right? So what I'm going to do right now is, let me just regain my cursor. So I'm going to show you, this is 9:30, this is 9:35, 9:40, and this is 9:45. So at 9:45, you can expect what? A pullback. Guys, trust me, it works clockwork. It's like clockwork. We teach this in our class, and it is impeccable timing. Now, at 9:45, you can expect a pullback or a range, and this is exactly what happened. If you guys, I don't know if there's anyone in here that is a member to our trading room or a student, they are going to be able to tell you that the next timing in the market is 10:30. So 10:30 is, guess what? Prime time trigger time. Prime time trigger time is going to carry the price higher. Once the price triggers into 10:30, you're going to get, guess what? And this is the 10:30 right here. Okay, this is the 10:30 right here. Once you take the trade at 10:30, this becomes your stop right here. You can see the timing. Look at the timing right here. When the trigger happened, I'm going to draw a straight line. It's at 10:30. You cannot make this thing up. I'm telling you, you cannot make this thing up. So at 10:30, you have a prime time trigger time, and you can see that we have the blast off. And here it is from prior resistance into resistance right here. Full completion into the target spot. You can see it right here, target zone. This is what you do in the morning. And if you decide to trade only 2 hours a day and done, just like I do, you're done. Okay, you're basically done. 11:30 and you're done. So 10:30 is, again, the prime time trigger time. Now, another thing that I want to highlight here and, let's say educate you guys on, is that every trade that happens between 9:35 and 9:45 is very short-lived. So if you are in a scalping mode with a 2-minute high or a 5-minute high low, then you should not expect massive follow through, because these are very small sequences in which these algorithms are trading. So they're trading 9:30 to 9:45, 9:45 to 10 o'clock, 10 o'clock pulled back, and then they reshuffle, and then they reignite at 10:30. So now that you know that, okay, you know a lot about, our style of trading, because we go with the institutional moves. We don't wait for any kind of institutional moves to show us, increase in volume on this and that. No, we know exactly when we strike, and we know exactly the patterns that they're going to go by. And that they're going to be using. And here in this example, we blasted over the high, we continue higher, and that was it. And it was in a prime time trigger time. And it pretty much happened in all the indices, even in the crappier one like NASDAQ. That was today. But I'm going to go one by one, and I'm going to do here E-mini S&P. And E-mini S&P had a similar pattern. We had a first 1, 2, 3 up. And you can see here 9:35, 9:40. What do you see at 9:45? Pullback. And this is exactly, if you go back, and when David is going to post everything online, and if you're going to go back and listen to my pre-market game plan, and also as I was commenting through the morning session, I was saying that it's 9:45, this is where we're going to pull back, because a lot of traders are thinking, you know what, it just triggered higher, I'm going to hop in. And oftentimes a lot of traders hop in right into the highs, right? Not knowing that 9:45 is a reversal time. It's actually one of the most important reversal times in the market for algorithms. So the algos took the price down. We see that the price is still elevated above the 10 exponential moving average, and we have the chunk, right? We love the chunk because we know that any kind of chunk action right here may push the price higher into 10 o'clock. Okay, and then at 10 o'clock, what do you expect at 10 o'clock? 10 o'clock to 10:10. I just said it. You're going to expect the pullback. Here's the pullback. What are you going to expect at 10:30? Here it is at 10:25 and 10:30. Full ignition higher. Take a look at this bar right here. These are igniting higher into 10:30 because this is the prime time trigger time. Now, in this particular scenario, you don't have a breakout, but you have a pullback and 5-minute rotation, right? You have this pivoting low, this pivot low that formed where in the moderate bullish above spot. So you are into the positivity. So you have the confirmation that if you're getting in a trade and if you're getting to the long side, guess what? You're going to be on the right side of the trade with the institutional power. And then again, if you go to the left-hand side right here, let me just get a marker to highlight that for you. You can see that this prior high right here is creating support for price action, because resistance has a tendency to form what? Minor support, okay? This minor support spot, and if this minor support spot is holding without revisiting the prior low from here, that is the second confirmation that you are in an uptrend. And the price, you're in long, shorting is not an option, and you are going to head on higher. This is not a move. So what you see here, red, this is not shortable, okay? This is not shortable, just a pullback and a reconfirmation. Look how short this move is, and contrarian traders always have a very hard time. And the reality is they never make money in the market. Ask any long-term contrarian, they blow up their accounts and they're not even trading anymore. So basically they're in the market for a year or two and then they disappear. So this is what a contrarian would get, a portion of this swing low and high, which is totally insignificant. And a trend trader gets all this. So it's not even a comparison, okay? Daniel, what is your win rate on the 5-minute breakout strategy? Well, if you go to my portfolio, if you go to the website, if you go to my website, TradeOutLoud.com, and scroll to the bottom, to the very bottom of the page, you're going to see that most of the strategies are based on that alone. And my win ratio is over 85% on that. Okay. The bullish above and the bullish above spots and the target areas I teach in our course. I teach our traders how to do them. They're not automatic. They change every single time because that's how the algorithms change as well. So, and we teach every single thing that you need to learn about trading from A to Z, literally from student to professional trader. In our course. And we actually have a course that is coming up. We only have very few seats available for that. Actually, I think we only have 3 or 4 available. And the course starts on Monday. It's going to be like a super loaded power course. We're throwing in all the bells and whistles into this course, plus 3 months free into the trading room. You could go online and also find that out. It is called the Power Income Futures Trading Course. All right, so you can see how, the price action is reacting. And I just want to show you really quick NASDAQ, because NASDAQ was a little bit more sluggish today. It was divergent, was heavily divergent and really crappy compared to the whole overall market environment because that's the way it traded. So here in NASDAQ, I try to stay away from NASDAQ because I really didn't like the way it was trading, but it didn't have a really bad scenario. A lot of traders were caught to the short side right here. You can see it into this dip, and you can see it also into this dip. And the reality is that if you would have wanted to hold short for a relatively long period of time, this happened. So you have the massive move that happened to the upside. Now, all in all, basically, everybody that sees a high and a lower high obviously is tempted to take the trade short, and they pretty much ignore the higher time frames where I do my analysis on the 1H chart, 1 hour, and you can see here that we have resistance into the 600, which is pretty much the area where we have had the resistance in yesterday's trading session, and we have the support level here. But you see all this chop and you could, and basically you can identify yourself if the price action is going to be choppy or sloppy or whatever based on prior price action. And it proves to us that, hey, when we open on Tuesday, look what we did. We went up and down. All of these wicks to the upside or to the downside, they're really massive wicks that are not taking the price anywhere. So you can see it just never had a continuation higher, never broke above, never broke below. But what is the one common denominator of this chart? Can anybody tell me what the trend is into this chart? Anybody can tell me what the trend is? Higher. Exactly, Thomas. You got it. So the trend is higher. So why would you look for a short, even for a scalp? Why wouldn't you want to go where the institutions are actually dropping all their cash into? So all you have to do is basically wait for what? Wait for the break above any kind of resistance spot or any kind of bullish above spot in order to take it higher. And this was the area right here. So you have to have a little bit of patience into this development, because as you can see, the breakout occurred at noon, and this was the confirmation for the break higher. And you can see that it ran from 600 to about 650 into the high. Let's say by trailing, you would be able to get about it into the 630, right? So you would be able to get about 30 clean points out of this trade right here. And also, we do also teach that there are 4 institutional price points on the chart where you're going to have a conglomeration of price action, which means that institutional traders are prone to leg into these specific zones. And these are present on the chart, but we teach this in our class. All right, so once again, if you have waited for the setup to happen, it would have happened a little bit later, so you wouldn't be caught into the chop here. You can see that once it got into the bullish above spot, you could actually nail another formation very easily into this area, because you can see that we had a shallow pullback right here that formed a pivot, and we actually had a resistance spot right here. So any break above resistance is going to create a power push higher. So you can see that once we initiate a trigger, and once, you know, the trade out methodology, you can see that it's followed by heavy green bar accumulations, right? And then remember what I said earlier, and he pulled back into the 10 EMA. Guess what? You would have had the opportunity to get back into this trade. Let's say if you trailed out very close into this area right here, right? If you would have trailed out, guess what? You had another opportunity to get out over this high. You have a doji high, doji low right here. This was your entry. Sorry, the line. Let me just clear it all up because okay, here it is. You get the doji high, you get the doji low right here. This is the confirmation and also the decision zone right here. Okay, so this trade right here would have been doji high. I didn't trade this. Like I said, I don't trade beyond 11:30 or 12 o'clock. But again, we teach you how to trade all day long. We teach you how to trade the London session, the Asian session, and beyond 12 o'clock if you decide to do that. So the parameters for this trade would be this bar high, 90, and the stop is going to have to be 78. So it's 90 by 78. This would be your target 1. This would be your target 2. Bam, this is going to be your target 3. Notice how we are achieving targets every single time. And when we're achieving targets, we get a pullback and an initiation back up. Okay, so does that make sense? Okay, one last pick right now in GC, and also we mentioned GC for the trading session today, and I've noticed that it has a breakout spot right here into the 75, right? With a target into 80. This is the first target into 80. It can potentially run higher, okay? So you can see here that the price is trying to hook above and kind of like gravitate around the 75. It's kind of like defending the 75 level, right? So this has the possibility of a continuation higher as well. And I also highlighted another trade in natural gas, okay, that actually did nothing. And these are all levels that are still intact from for tomorrow's trading session. If natural gas is going to break $2.48, you're going to have a first target right here into $2.50 and $2.54, and this is going to become this low right here, and the support spot is going to become your stop. So you can see how these levels are helping you generate trading opportunities, whether you're day trading or whether you're swing trading. You can have plethora of trading opportunities. I think there's a trading opportunity lining up contingent on the bonds. And like I said, you can use it for day trades. You can use it for swing trades. You could use it for core trades, which means that you're going to be holding the position for a relatively longer period of time. And a break over 175.27 is going to propel the market higher back into the 180s, contingent on holding the 169.13. However, we never had a trigger yet, so we have to be very patient. Again, I have a pattern, I have a trade. If I don't have a pattern, I don't take a trade. Nobody's forcing me to take a trade unless I have my clean, clear parameters, because it's my account, it's my money. I love my money and I love my account. I love trading and I love the accuracy of our methodology. And trust me, it was very challenging because I come from the investment field. And it was very challenging when I decided to quit my job and say, hey, I'm going to become a day trader. It was like a totally different new world. So I had to reinvent my trading around it. And plus I had to customize my trading for a retail account. So not necessarily for a multi-million-dollar account. Okay, so now I'm going to take some questions right here. I see some stocks, KODK. Now, KODK was in the news yesterday. They looked into their I would say credibility. So what is it? Their the loan performance and I would say the legality. Let's say the legality of the loan that they have received, and this spiked the price higher. Right. Oops, sorry. Not there. Let me go to the daily. Okay, here we go. And that was yesterday. So I did get the same question with KODK yesterday. And in fact, I did wanted to see the chart. Actually, I'm not a big fan of KODK. I think that there are 6,000, maybe more than 6,000 other stocks right there. Sorry, KODK. I don't know why it shifted. Okay, there are others over 6,000 stocks that can perform better, but I'm going to tell you what I read right now. If it starts trading below 1050, it's going to go back in the bottom of the base. There's still no foundation for the stock and no reason for it to blast higher, like literally. Maybe in time, I mean, maybe, okay? I'm not a big fan of it. I'm just telling you right now, right off the bat, and I'm going to give you an exact parameter. If KODK is going to break outside of the $14.20, it's going to go higher. And it's probably going to try to go for, I would say, for a first target, at least into the $17 and $17.50. Okay, so that's my take on the market. All right, anybody else? Anybody else? Stocks, futures, commodities, anything that you guys wanna have? I actually have at least, I think, 15 or 17 open positions in stocks right now, and they're all reacting really, really well. Just let me know. Do you guys want my take on the market going into tomorrow? We're very bullish. We ended the day strong. Odds are we may continue higher. We break above today's high. We're going to continue higher. You want to know how high? Okay, like if you want to see, okay, I'm going to switch to the weekly chart right here. I'm going to show you where the market is heading within the next segment. We're going to go in the Qs to $315, and then we have another target spot into the 330. Okay. BLNK, sure. Let's check it out. BLNK. All right. So Blink, it actually rotated already on the weekly. I don't know if you're in or if Daniel, if you're in the trade or what your bias is on this. But the entry was $27.05. $27.05 was the entry. And this is the entry candle this week. The stop, however, because of the volatility, would have to be your 10 EMA, and it's heading higher. We have a prior high right here of 34 and change, and that's going to be your first target. From the daily perspective, nice pullback, rotation. You can see here that once the price regained the 10 EMA, look where it closed. It opened, pushed higher, right? It did the pullback, the forced sell, and then rotating higher, it's chugging along. So tomorrow, if it breaks above 29.76, it's definitely going to continue higher and try to 32.34, 34.67. Amazon and Tesla. All right, Amazon has been, Amazon has been relatively stuck into a range. So let me just squish this chart a little bit here so you can see it. So a decision is pending on Amazon, and that is because you can see that it's a bullish pennant within, wait for it, a very bullish trend, right? So in this scenario, any rotation to the upside is going to be viable because institutions are going to look to leg into this. And plus, you guys should know that in starting with next week, actually with mid December, we are going to have a full effect. We're going to start window dressing. We're going to start the January effect. And possibly Santa rally, and maybe this is going to be one of the sleepy giants that is going to ultimately wake up and it's going to start moving a little bit higher. We had already Amazon that woke up a little bit. Oh, I'm sorry, Apple. We have Microsoft that pushed up a little bit today. And by the way, semiconductors might be picked up, but definitely Amazon had a massive gain throughout this whole entire year. This is the pre-COVID high right here. Okay, this is the pre-COVID high. This is the February high right here. This is the COVID low, and you can see that this stock has not been impacted a lot. So long term, this is very bullish. Again, bullish directional bias for higher because of the pennant formation and because of all of the information that we have from the daily chart with the higher highs and higher lows. And again, here it rotated on the daily. So I do expect for tomorrow, it's been very choppy. So I'm not going to say it has not been one of my favorites so far. But one thing that I'm noticing is that after it did a little bit of washout this morning, it regained. We need to see a close above this 50 SMA. If we don't see a close above the 50 SMA, it's not going to take off. And every time the price is going to hit the 50 SMAs, the price may get rejected. I would love to see a weekly rotation. So for me, and for those of you, how many of you guys are doing options? Exactly. COVID helped Amazon. Daniel, right on the money with that. And in fact, remember that in window dressing, and for those of you that are doing options, and for those of you that are doing exactly, I'm going to give you the exact parameters for this trade. So if we're going to get a break of 32.49 or 32.50, okay, it's going to start running up to 3,300, 3,400. Okay, a little bit longer term if you want to keep it like January, February, 34.50. Okay, 34.50. So that would be for Amazon. And remember, this is COVID safe, let's say, stock. And remember that as we're getting to window dressing, like I was mentioning before, there is all of these stocks that have been outperforming, like Amazon, like Apple, Facebook, semiconductors, I don't know, Nvidia, Microsoft, all of these, PayPal, Square, you name it, Micron, they're just going to get picked up. So they're going to increase their volume because institutional traders, hedge fund managers, portfolio managers, they're going to jump into these stocks. Why? Well, because if you were in a stock like, I don't know, Kroger or a beaten down like CCL and CCL airline, or an airline or a cruise liner or whatever it is, or a restaurant, and it's down, those stocks may have the potential of continuing lower because the actual window dressing effect, what this does is that institutions are dumping their underperformers and they're jumping in overachievers and overperformers, and they're going to drive the price up into these. So expect Amazon, Microsoft, Nvidia, Google, Apple, Facebook, you name it, Netflix, Square, etc., to continue higher, along with financials. Financials perform really well in the last couple of weeks in December, so keep an eye on those. Keep an eye on XLF, Goldman Sachs, Bank of America. Depending on your price range, there's a little bit for everyone there. So Amazon, again, very bullish. So like I said, this is going to be the go ahead, and this is going to be the trigger for higher, whether this is going to happen this week or at the end of the week. We're going to read the new parameters. Okay. Oh, absolutely, Daniel, you are right on the money with that. All right, let's do Tesla right now. We have a couple of more and we're running out of time here. Tesla, new high, and Tesla is running like wildfire. So let me just put some targets for you because the decision was a while back. Okay, so Tesla has just achieved the 161.8 level target and it's running to 780. And again, this is a longer term target. This is a core target compared to these two green lines right here, which are swing targets. All right, so definitely Tesla higher. Obviously, you can see that the move is a little bit parabolic and the price is really extended from the minor support spot into the 507. So remember that nothing goes parabolic, and everything that goes parabolic is going to ultimately have some kind of pullbacks. And of course, Tesla is just running higher. There are a lot of Robinhood traders that are chasing it and trading it and keep on getting into it. Okay, I think we have time for one last symbol, and that is PLTR. And this is for Jorgen, PLTR, okay? All right, so the weekly chart, this formation that you guys see here on the weekly is a bullish sandwich. So what that means is that the trigger was $30, and from the weekly structure, $30.13, and it should gain some velocity above. And this is just the weekly chart. From the daily chart, okay, you can see that the decision point was right here. Earlier point was $23.35 right here. 30 cents, 40 cents. This was the entry right here. Once you saw the price that was running above the 10 EMA, that was the and it's a highly news-driven stock. And the amount of shares that were traded today were incredibly high. 124 million, over 124 million shares traded today alone. So another thing about stocks, I swing trade stocks all the time. I typically have 15 to 20 or 25 active positions in my portfolio at any given time. So I do trade more. I swing trade more than I day trade. When day trading, I take between 1 and 3 trades a day. But when it's swing trading, I'm very aggressive into my swings. Absolutely, you guys are welcome. All right, so I think that my time is almost up. And if you guys want to visit our website, you could go to TradeOutLoud.com, and you can review all the products and the services that we offer. Here's our website. And we do have the futures day trading, the Power Inc. Futures day trading course that is coming up. It's starting on Monday. And we also have the stock swing trading course. It's called Wealth Generating Trading Course. It's a 5-day. All these courses that you guys see here, they're all live. They're all in a live market environment. They're all taught live. And this is one of our key things here, because I do not agree that, you could buy a book from Amazon. You can read 57 books from Amazon, and you can, kind of like go through a lot of DVDs, but there's nothing that compares to live trading and live environment. And again, if you guys are interested, if you want to trade with me, we do have 2 programs. We have the futures live trading room, and this is the futures live trading room. And we also have the stock swing trader, which in both services we have above average game, and on record it was a record year for me. Okay, so this is all. Thank you so much, Daniel. I appreciate your input. Thank you so much, and I wish you guys good luck for the rest of the session. I know David has lined up a lot of traders in here that are phenomenal, and in fact I think Samantha is next, if I'm not mistaken.